Visa and MasterCard are under fresh fire from the European Union. This time, it's not about attack or competition. It's about scam fees. Those behind the scenes charges banks pay to use their payment networks. The EU is basically asking, are these fees fair? Do merchants actually have a choice? Or are Visa and MasterCard just too dominant to avoid? Now, if this turns into a full-blown investigation, we are talking about fines that could hit up to 10% of their global revenue. All of this is happening as Europe pushes to break its reliance on foreign payment systems, and Christine Lagarde is out there promoting a digital euro as a solution. But here's a twist. While the regulators are circling, Visa just posted another solid quarter. In this video, we are breaking down Visa's second quarter results, how strong the business really is, what rates are creeping in, and whether the stock still deserves a spot in your long-term portfolio. This video is for informational purposes only and not financial advice. Always do your own research. Investing involves risk. Visa just wrapped up its fiscal second quarter with results that really show how resilient the business still is. Net revenue was up compared to last year, even after adjusting for forex and acquisitions, and margins stay strong. The GAAP APS also grew double digits thanks to solid operations and strong cash flow. Now sure, GAAP net income look kind of flat, but that's mostly accounting noise. Under the hood, the business is running well. This wasn't a growth on paper kind of quarter. This was driven by real activity. Visa's growth this quarter was mostly powered by stronger payment volumes, especially from international markets and cross-border activity. More transactions are being processed overall, and value-added services are starting to play a bigger role in the revenue mix. On top of that, Visa returned $5.6 billion to shareholders through buybacks and dividends. And just to flex a bit, they also got approval for a brand new $30 billion buyback plan. Management clearly sees long-term upside and isn't shy about putting cash to work. Looking at the monthly trends, February was a bit soft, blaming the leap year, but March and April bounced back strong. Spending picked up across debit and credit, even with a macro backdrop that's still kind of uncertain. Cross-border trends followed the same pattern. E-commerce and travel spending kept rising despite currency headwinds and tricky calendar shifts like Ramadan and Easter falling in different months this year. All in, Visa stayed well above pre-COVID trend lines. Globally, Visa saw solid volume growth, especially on debit cards, that tells you consumers everywhere are leaning into spend what you have instead of borrowing. A clear behavioral shift. Regionally, international markets like Latin America and Asia actually outpace the US. That's big. It shows Visa's global expansion is gaining traction, especially in emerging markets where digital payments are scaling fast and cash is still being replaced. Visa processed over 60 billion transactions this quarter. That's a massive number, and the majority were debit. Cross-border volume also jumped double digits, showing that international spending is officially back in full swing. And the best part, that operational strength translates straight into free cash flow. In just 6 months, Visa handed back over $10 billion to shareholders. This is the kind of business that scales hard and prints money. Visa now has nearly 5 billion cards in circulation globally. Debit cards are growing faster than credit. No surprise there, given the global push towards financial inclusion and direct payments. Credit card growth is still happening, just at a slower pace, which makes sense in more mature markets. But Visa is also rolling out new use cases like transit cards and tap to everything in developing countries. That's where a lot of future growth will come from. Revenue is up across the board. Core services, data processing, international transactions, they all grew. But the biggest jump came from ad revenue, which include things like stablecoin settlements, fraud detection tech from future space, and open banking through Think. This isn't just a car company anymore. Visa is evolving into a tech platform for global payments. Tap to P2P tokenization and real-time transfers are all part of the bigger story here, and they are gaining traction fast. Operating expenses were up to 22% year over year, mostly because of litigation charges and tech amortization. Marketing and network spending also went up, makes sense with all the product launches and global expansion. But here's the interesting bit. General and admin expenses actually went down. So even while investing heavily in growth, Visa still keeping the core overhead line. That's smart and it helps keeps margin intact. For the third quarter, Visa's guiding for low double-digit revenue and expense growth, but high teens EPS growth. This suggests the company sees more operating leverage kicking in. For the full year, EPS growth is expected to land in the low double digits, cautious but realistic given all the macro noise out there. Tariffs, regulation, FX volatility. Still, Visa's not backing down. The strategy is clear, the model's working, and they are staying disciplined. Now let's talk valuation, because growth is great, but price still matters. Based on Visa's latest performance and assuming they hit their full year guidance, we estimate their free cash flow for 2025 at around $20 billion. We are projecting that cash flow to grow 10% annually over the next 5 years, then slow to a more conservative 4% terminal growth rate. Using a discount rate of 8%, the result is a total enterprise value of roughly $676 billion. With about 2.1 billion shares outstanding, that gives us a fair value of $320 per share. Visa still looks reasonably valued and possibly even undervalued for long-term investors. If you are building a portfolio around quality compounders with global reach and predictable cash flow, Visa deserves serious consideration. Don't forget to like the video, subscribe if you haven't already, and let me know in the comments.